more minutes and then we'll go ahead and let Adam get started. So thank y'all so much for joining us today. I know these are crazy, crazy times and there's so much information out there. So we are happy to be here today to help address questions that you have and hopefully get some clearer answers and information that's accurate and up to date, because I know it changes every day. So we are happy to be here. And so thankful for Adam joining us today, taking time out of his day, for Warren Averett supporting him doing that, so that we can really address these questions and really plan out how to move forward with our businesses and the organizations that we run. Because I know it's scary and not really knowing the right steps to take. But so thank you, Adam, for being here and helping put us on the right path. So for everybody who's watching, we are also, I'm gonna flip back my screen and check, but we are also on Facebook Live. So the recording of this will live on Facebook. So if you wanna go back, it is on there, I just checked. If you wanna go back and re-listen or send to a friend, it'll be on Facebook under Forge's Facebook page. It's just Work at Forge. It's very easy to find. But it's about 10:34. So we're going to go ahead and get started. I want to be respectful of everybody's time who's here today. And please just continue to put questions in the Q&A and we will go from there. We can, I'll keep an eye on them and then ask Adam as we go along. So Adam, I'll let you introduce yourself. Thank you.
Sounds good. Well, thanks for having me, Kim. So, and on behalf of Warren Averett, happy to be able to do this today. We have been keeping a very close eye on this legislation for the last 2 weeks. And I guess I should start by saying that this legislation really moved quickly. I mean, if we look back, 3-4 weeks ago, nobody had any idea, I think, of the financial impact that was coming, and then also the fact that we're sitting here today with a $2 trillion stimulus package that was passed Friday. So just, really remarkable how quickly things have changed. But, today we're going to talk about the stimulus package. There's a lot of good stuff in here. And if we have time, we can hit on some of these other tax items. But the focus today is really on the stimulus for small business. And the primary, the kind of the centerpiece of the stimulus for small business is this expanded 7A loan program. Also, basically the payroll or the paycheck protection program. And what that is basically they have allocated $349 billion to be loaned to small businesses. Small businesses are defined as those businesses with less than 500 employees. There are some affiliation rules that apply. So to the extent that you have, related entities or even, venture capital money, that's something that you need to be mindful of. And just at a high level, those aggregation rules can make you pull in some of those employees from your outside investors. They basically require you to aggregate gross receipts and employees to outside owners. Those SBA affiliation rules with respect to the 500 employee test are highly factual. It's a pretty, deep analysis, so we're not going to get into those today, but just know that that's out there. So this program applies to anyone with no more than 500 employees, subject to the SBA affiliation rules. And it allows these small businesses to go out and obtain a loan, and that loan is 2.5 times your monthly average payroll. Okay, so basically you would look at your last 12 months of payroll and take the average, average per month, multiply that times 2.5, and that is your loan amount.
Can I ask you a question really quick that came in, because it's very applicable to right now? So somebody just said, what if you have everyone on your team is on contract and not an employee?
Yep. So one of the things in the final legislation is they do allow independent contractors, so those 1099 contract labor, those people, they qualify. Now, the catch is you have to have issued them a 1099, miscellaneous form, in the prior year. So if you've done that and you have 1099 labor, they are eligible and are a part of this 2.5 calculation that we're talking about.
That's good.
So you'll have your 2.5 times, and that's payroll or independent contractors. It also can include self-employment earnings. So to the extent you're a sole proprietor on Schedule C, it can include your earnings from that, basically for 2.5 months. That is an area that we are awaiting guidance on. It's not real clear how that will work for a sole proprietor. So if you're just a Schedule C, and you basically you have earnings on Schedule C, those are going to be a part of this formula, but it's just not clear how those, how exactly those mechanics will work. But they have a carve out for sole proprietors in here. So just to kind of back up, you've got your loan amount, 2.5 times your monthly average payroll. That payroll can include salaries and wages to employees, 1099 labor, or self-employment earnings from a sole proprietorship. You get your loan, and you'll basically have an 8-week period from the day that the loan is originated to spend your loan proceeds on qualifying expenses. And those expenses that qualify are payroll, rent, utilities, and interest expense. So to the extent you're able to spend all of your loan proceeds on those qualifying items, and you're able to maintain employees, 100% of the loan is forgiven. So that is a big part. Obviously, the crux of the whole program is that this loan can be forgiven if you spend it on these qualifying expenses and you maintain employees. Now, there are probably some small businesses on the webinar today that have already had to let people go. One favorable provision that I think is really great in the bill is if you've had to let somebody go already, as long as you bring them back by June 30th of this year, you're still eligible for the loan forgiveness. So if I were to just give a simple example of how this employee retention works, let's say you have 50 employees and you get your loan, but you've already had to lay off 25 of those employees. So if you get your loan, you've already had to lay off 25 employees, which is half of your workforce. You spend your loan proceeds on qualifying expenses. If you're not able to rehire those 25 employees, then 50% of your loan would be eligible for forgiveness. If you were able to rehire those 25 employees by June 30th of this year, then 100% of your loan would be eligible for forgiveness. So that's a unique, a special provision in the law, which is great because it's going to allow people to go out and rehire those people they already had to lay off. Now, I'm oversimplifying it, but I'm just trying to give everybody a feel for how it works. And
so even
if
you didn't spend that money on those 25 employees' salaries, if you just used it for your other qualified expenses, but were able to bring them back on by June 30th, the loan would be forgiven.
So good point, Kim. And there's actually, so there's an exception. You have to spend these loan proceeds on payroll, rent, utilities, and interest expense. So there is a point here to where if you do not have enough, employees to eat up, those qualifying expenses in that 8-week period, you may not have the entire amount forgiven. So I would say the loan forgiveness, you can really break it down in 2 components. The first component is I have to spend these loan proceeds on qualifying expenses in an 8-week time period. That's requirement number 1. And again, those qualifying expenses include payroll, rent, utilities, and interest expense. And then the second requirement for loan forgiveness is you have to maintain your employees. They give you a break on maintaining your employees as long as you basically rehire by June 30th. And one thing I glossed over at the beginning that there probably are some questions on for people on the call. There's been a lot of talk about these disaster loans. So if I could just, go back and say what we're talking about is this new expanded 7A loan program that is the Paycheck Protection Program that is a part of the stimulus. There's also SBA disaster loans that are out there. And the main difference between the two is that these, the loans we're talking about, the Paycheck Protection Program, have basically 100% loan forgiveness if you meet certain criteria, where the disaster loan that you apply for directly through the SBA's website, those do not have a loan forgiveness feature available. We're getting a lot of questions on which one should I apply for. We're telling everybody, based on what we saw with some of the guidance that came out over the weekend, you're able to apply for an economic injury disaster loan, which is that you'll see it referred to as an EIDL, which is this disaster loan directly through the SBA website. You're able to apply for that up until the day that these Paycheck Protection Program loans become available, which we expect these loans to possibly be available this week. That's all pending. We're waiting on guidance from the SBA and the Department of Treasury, but we expect them to do that in a few days. So you can go out and fill out an application for an economic injury disaster loan directly through the SBA's website, but that's something you want to do before the Paycheck Protection Program loans are available. And I would just caution, just full disclosure, this is very fluid. It's changing. So you're going to want to watch and see when these loans are available. And then you can't apply for a disaster loan through the SBA website in this Paycheck Protection Program if you're going to use the proceeds for the same purpose. So there's basically you can call it a duplication clause to where you can't apply for loans for the same expenses.
Okay, we have a few questions coming in, so let's answer these questions and then see if there's anything else. So, okay, one of the questions is loan forgiveness considered taxable income?
Great question. So it is not. They made a specific, they mentioned that in the bill, and loan forgiveness is not taxable income. So that's very favorable for everybody.
That is good. Okay. So the next one said, you've addressed this a little bit. What about business where the owner is the only employee? If they're not a Schedule C employee, but, K1 or whatever, what can they do about that?
So if you have a business where, the owner is receiving a W-2, you're still eligible to participate in this program, considering you meet the other requirements. So basically, if you're the only employee, then your calculation for your loan amount is going to be your salary. And one thing I should point out is that salary in the 2.5 calculation, you're basically multiplying salaries and wages times 2.5. Salary does not include compensation in excess of $100,000. So you can include up to $100,000. But then anything over is excluded in this calculation. And then there's a lot of other things that are mentioned that are part of the salaries and payroll calculation, retirement benefits, health insurance premiums, payroll taxes are excluded. That's one of the other items that's excluded, and that's employer and employee payroll taxes. But to answer that question, yes, if you're an owner and you're receiving a salary, you're the only employee, you are eligible to participate.
Okay. What time period of the payroll do we need? Like, do we just show last calendar year, or is it like, okay.
So the calculation is a trailing 12 months. And this is one of the things we expect to get some guidance on this week. I mean, because if you read the bill or the law now, it says, trailing the last 12 months. Well, there's going to have to be a cutoff somewhere. Mm-hmm. We're telling everyone to go out there and just start getting your hands around all your payroll data for the last 13 months, just to make sure you have everything. by the time these loans are made available, it could be, the previous year covering March 31st and prior.
Okay. Okay, the next one says, I said, you may have said this, but you have to spend loan proceeds, payroll, rent. Do you send bank statements or deposited checks? Like how do they know what it was spent on, and then what is
Yep.
the deadline for sending this proof?
These are great questions. So you are going to have to submit expenses to the bank, basically proving what you spent your loan proceeds on. And based on the law and what we see, it is very detailed. So that this is, I mean, they actually go to they're requesting invoices. So that's going to be a big part of this, not only, getting the loan, but then applying for the loan forgiveness. And the bank is going to be responsible for, taking what you provide them and basically, having you certify that, you spent the proceeds on all of these items. So it's, we would say whatever you're spending these proceeds on, you're going to need detailed records. And then just one more time, since we don't have a PowerPoint up, it's payroll, rent, utilities, and interest expense. And then, one key thing that I should point out is that for the rent, interest expense, and utilities, those are all, pretty much obligations that were in force or in place as of February 15th. So, you can't go out there and sign a new lease and then start using these proceeds for it. We're getting a few questions like that. And then you also, you can't take on any new debt and pay that interest expense. But to the extent you had debt that was, you had before February 15th of this year, that interest expense on that debt would qualify.
Okay. Is there a world where this loan forgiveness criteria changes, where the bar gets higher?
I think if you look at it, they're really trying to help small business, and they know that they have to remove as much of the red tape as possible. They have to make it easier for the banks to underwrite these loans. So they've tried to remove the red tape. This is, I guess anything could change. And I've heard that they're already working on stage 4 of the stimulus package. So, we've had stage 1, 2, and what we're talking about today is stage 3. They're already working on stage 4. If anything, and this is all, just unofficial, but I expect them to do, probably have more stimulus coming. So I don't see a situation where they would claw back this loan forgiveness.
Mm-hmm. Okay, here's another question. Are there restrictions? Oh, you kind of addressed this, but didn't go all the way in, to companies that have received venture capital. So if you have received venture capital, what does that look like?
Yeah, so the SBA affiliation rules are pretty complex, and just not something that, a lot of people, or I shouldn't say a lot of people have dealt with. It's something that, comes up. And basically what those are is, these are small business loans. Now they've expanded the criteria for this program, but these SBA affiliation rules have always been around. And really what their purpose is to make sure, hey, if we're making a loan, we're helping a small business.
Right.
So there's a 50% test with these affiliation rules, where basically if there's ownership, then, or control, ownership more than 50% or control, then you start getting into issues with these. But the rules themselves say, even if you don't own 50%, it's still subjective, and they actually say it's a highly factual determination. So it's just really hard without knowing the specifics of a situation to say how they're going to impact. For example, one of the things you have to look at with these affiliation rules is if you have convertible debt, warrants, or stock options. Those can even factor in. So this will be an issue for the banks with venture capital, private equity. It's going to be an issue for them to vet all of these rules, and it's probably going to snag a lot of companies at the end of the day.
Mm-hmm. So has there been anything addressed with nonprofits and how they're like, can they apply for these? What
So,
is?
yep. So 501c3s are eligible to apply.
Mhm.
Um, so, churches, religious organizations who typically would not be eligible for a program like this under existing 7A, guidelines, if you will, have not been eligible, but they are now.
Mhm.
And then there is a carve out. I'm looking at it there's another type of not for profit that's eligible as well, but maybe tribunal organizations. But
Mhm.
primarily in the not for profit space, it's going to be it is your 501c3s
Okay.
that are eligible. They don't open it up to all not for profits, just the 501c3s and that other one that I mentioned that's out there.
Okay. And then somebody said, can you define interest expense? So is that like on what?
Yep. So
How
interest
is this defined?
expense, they really don't make reference to it or define it in the bill, but I mean it probably will have its usual meaning of basically interest expense on a lot of credit, on obviously any debt obligations. I mean, so I would say we're going to get some guidance on that, but think of interest expense as what you typically see, and what you would consider interest expense. I don't think they're going to open it up to anything new.
Okay. Another question is, can non-US payroll be included if you have Canadian payroll?
Another great question. So non-resident payroll cannot be included. So non-residents
Mm.
are excluded.
Okay. That's cut and dry. Okay, next question. So we apply for the paycheck protection loan as soon as possible via the SBA website, or is that through? Okay,
So
and their question, I think the paycheck protection is the same as the 7A. Is that correct? The
correct.
7A is paycheck protection. So we would apply for the SBA
Yep. So
EIDL first
that's
and
right.
then paycheck protection. Okay. And where do you
Correct.
apply for each?
Yep. So for the this economic injury disaster loan, which you'll also see referred to as EIDL, um, you apply for that directly through the SBA's website, and you can do that now.
Mhm.
And I've just caveat, you can apply for that EIDL and you can apply for the 7A if you plan to use the proceeds for the same
Separately.
purpose, because there's a duplication rule that says you can't take out a loan under EIDL to pay your payroll, and you can't take out a loan under the 7A to pay your payroll. So there's that exception out there. So you can go out there today and you can apply for the EIDL directly through the SBA's website. That is, the EIDL does not run through a private lender. And what we're seeing right now is that you can apply for that EIDL up until the day that these Paycheck Protection Program loans are made available, which may be as early as this week. And then in terms of the 7A, the Paycheck Protection Program, those will all run through a private lender. So if you've been impacted by COVID-19, it's a good idea to go ahead and reach out to your bank or your lender and let them know that you're interested in this program and start pulling together all your payroll paperwork. And then I would just caveat, again, with this EIDL, you may be eligible. We're waiting on confirmation from the SBA, but you may be able to apply for an EIDL after these paycheck protection loans are available, but that dual purpose duplication rule is still going to apply.
So what about if you're applying for the EIDL loan and you don't expect to see your losses for a couple months in the future? Should you go ahead and apply for it now, even though you can't show those losses?
So one of the requirements for the EIDL is that you had or incurred an economic injury loss. So that could, that's going to impact your EIDL application. So just something to keep an eye on. One of the things with the EIDL is They do, it looks like they will place a blanket lien on the assets of the company because they do require collateral when the loan value is over 25,000. So that's something to keep an eye on. They also require a personal guarantee if the loan exceeds 200,000. And that's different from the 7A program. Something I didn't mention is with the 7A program, they have waived the collateral requirements, and they've also waived the personal guarantee as well.
Okay. Do you recommend applying for these on your own, or should you get help from a professional, an accountant, a lawyer, a banker? What's the best way to do these?
So, I think I would say, the lender is going to be the one that is, primarily involved, with the application. I mean, your accountant can assist with helping you pull information together. It's always a good idea. I mean, I think you're going to have to work closely with your lender on these applications. Hopefully, it's very simple. I mean, they're going to have to make these simple if they want to, make this many loans in this short a time frame. So it's never a bad idea to bring, anybody else in. But I would say from an accounting standpoint, they're going to be helpful, telling you what expenses can qualify. And then I would really lean on your lender to help you complete the application and dot all your I's and cross your T's.
For the paycheck protection. And then the
Correct.
SBA you just do online.
Correct. And that website has been crashing. It was down a lot the last 2 weeks. I think I haven't heard anything lately, but I think it's up and running now. I think they partnered with Microsoft last week to help improve the website. I mean, that website just wasn't designed to get as many hits as it has been the last 2 weeks. But yeah, the disaster loan is something you can go out there and apply for by yourself.
Yeah, I worked on the application, and then I heard it was crashing, and then I heard people say it wasn't working on Chrome, which I had worked on it on Chrome, so I don't know. I don't know if it's back. Chrome is available again. And what is the website? Do you know the link? It's just SBA.
Yeah, SBA, and then they have a disaster loan link on there to where you can go out there and apply there.
Yeah. Okay, back to questions. Let's see. This is I'm asking for a friend. So if you're not sure about what your loss will be, but you want to go ahead and try to get access to funds, and then you don't need as much as you've borrowed from the SBA, can you pay it back right away, or does it have to go over the full term?
So there's no prepayment penalty on these loans. So to the extent you want to pay these loans off quicker,
right.
You're certainly able to do that.
Okay. All right. I think, Autumn, I think we've addressed your question about the first 3 steps for the 7A. If you want further explanation, just say it here. But I think we've answered that question. Is proof of payroll off of our QuickBooks program deemed official, or do we need 1099s and W-2s to prove?
So I think you're going to have to show 1099s and then, your 940, 941 payroll reports, payroll tax returns. We haven't seen an official application, but I think they're going to require those. They may require W-2s as well, but definitely the 1099s and the payroll tax returns. And I don't right now, just purely speculation, but I don't think they're going to be able to use QuickBooks payroll data.
Okay. And this says, can you touch on the collateral and personal guarantee requirements again? And that's just for SBA. Correct.
So, well, on the SBA side, yep. So that's right. So on the EIDL, they do require collateral if the loan is over 25,000. And then it looks like they will place a lien on a UCC lien on all the assets of the company. They may decide not to do that, but right now that's what it looks like they'll do. And then there's a personal guarantee on the idle if the loan amount is over $200,000. Now, I should mention that the lack of collateral under the idle program does not mean that your application is going to be rejected. They won't reject it for that, but if there's collateral available, it appears they will take it. And then on the SBA side, or the Paycheck Protection Program, they have waived the collateral and personal guarantee requirements. So those do not apply to that loan program to the extent you use the proceeds for a permitted purpose. So, I mean, you could have a situation where if somebody, obtains the loan, doesn't use the proceeds for, what they're permitted for, that individual could lose their personal guarantee or lack thereof if they didn't use the proceeds for what they were supposed to be used for.
Okay. Is there any additional clarification on what affected by COVID-19 means?
Yep. So, we right now, I mean, there is a presumption that if you're, under the borrower requirements, if you're completing this application, that, the banks are, assuming that you've been impacted by COVID-19. Now, you do have to certify that these funds are needed to maintain payroll given the current economic conditions. And then you are also certifying that or acknowledging that you will use these funds for a permitted purpose. It's a fair question because a lot of companies are worried about the ripple effect, those that have not already been affected, but, can see some supply chain disruption or, worried about the future. So that's something we just keep an eye on in terms of impacted and what that means. But it's written broadly for a reason so that the banks, don't have to, prove that someone has been impacted. Because if there were a bright line test, then that would just add another layer to the underwriting process.
Mm-hmm. Another question says, which private lenders are best recommended?
So I would say, Secretary Mnuchin said last week that they were going to have every FDIC or try to have every FDIC insured bank eligible to make these loans. So I've heard, a lot of numbers, but I think there's roughly 1,800 SBA preferred SBA lenders in the country. Hopefully they have more. Some banks are not taking new customers right now, just because they're focused on making these loans to their existing customers. Mm-hmm. But an interesting fact, I shouldn't say fact, but I saw something out there where there's an estimated $6 billion of fees available to banks if you kind of average the fee schedule on what they may make. So, it's a good opportunity for them. So I think you're going to see a lot of banks jump on board and, try to be a part of this program.
Yeah. So somebody asked the question that they heard that there is a prepayment penalty on the SBA loan. Has that changed with all of this, or?
There's no prepayment penalty on the Paycheck Protection Program.
Okay.
Right now.
But what about the SBA, the idle loan?
I haven't seen that on the idle, but I'm 99.9% sure there's no prepayment penalty on the idle.
Okay. If you haven't filed your taxes in 2019, should you do so? This says, for example, I made more than 75K because I was working 2 jobs in 18 to get my business started. But this past year, I don't understand. But
yeah, so
anyways.
I think I see where you're going with that. So, and that's an interesting, for a sole proprietor who is going to basically use their tax return to, they don't have a W-2 or 1099s to prove what they made in 19 if they haven't filed their tax return yet. That's a good question. And the answer is we don't know whether or not you're going to have to, have a tax return ready to show your, self-employment income. I'm hopeful because there's a lot of, businesses that are in your, same situation that they'll relax that a little bit and, just make you provide some internal reports. And I guess one question that, we've gotten a few questions on these rebate payments that are the payments to individuals. So $1,200 per individual and then $500 per child, subject to certain income limitations. And some people are asking, well, I've made more, I'm going to make less. There basically will be a true up for that. So they're going to, base these off of your 2018 returns. And I think if you've already filed 2019, they'll have a way to incorporate that. But if there's any shortfall or they sent you, too much with these rebate checks, you'll true that up on your 2020 tax return. So I got a little off topic there, but that's something that obviously, they're going to be sending out rebate checks to every individual that qualifies. So just something to note there.
Mm-hmm. This says, how do we prove we paid employees and subcontractors? That would just be the 1099s and.
Correct.
Yeah. The next question is internet connectivity considered a utility?
I think it is. And I'm just going off what I think I've seen, but yeah, I think internet is considered a utility, and they define that in the law, but I think it's included.
Okay. All right. Is there any other questions we should be asking that we haven't asked?
A lot of good questions. And I think, again, this is just, I would say this is one part of the, this CARES Act, this economic stimulus. There's a lot of other tax provisions that are in here that can be favorable. So, and we haven't hit on those, and we don't have time to, but, just be on the lookout for those. There's some good stuff out there. And also, in a few weeks, we may have stage 4. So there may be more, stimulus coming.
So what's the best, as small business owners, what should we be watching? Who should we be talking to make sure that we're at the forefront and doing the right things at the right time?
Mm-hmm. So there's almost an overload of information right now. Any accounting firm, legal firm, there's a lot of good resources out there where you can just, go and read up on, cash flow management, how to take care of your employees during this time. So I think, you really just need to be looking at, one, the health of your business. So, doing some stress testing on your financials. I think it's good and prudent to do a cash flow analysis. How much cash do I have? Because everything has changed so quickly in the last 3 weeks. So, just keeping an eye on your cash flow, I think is important. Taking care of your employees, making sure you're providing them with a safe work environment. And then, really, I guess I'll put a plug here for Warren Averett on our website. We have a page out there on, warrenaverett.com that has a lot of resources, just as new tax developments come out, anything that you can, take advantage of as part of the stimulus, just find a resource, whether it's Warren Averett or somebody else that, you can plug into and try to stay up to date on, everything that's happening.
And if people wanted to reach out to you directly, could they do that?
They could, and we could probably share my email
Okay.
and put it out there.
Okay, yeah, we can do that in a follow-up. We'll email everybody a copy of the recording, which is also on our Facebook page, and then contact information for Adam. But it looks like the questions, I think, we've answered everybody's questions that they have at the moment. I know that they keep coming. But thank y'all for coming today, for bringing these questions. Thank you, Adam, for sharing your time. And Yeah, this has been super helpful. It has helped, clarify a lot of the muddy waters for me. But just to everybody else who's attending, thank y'all for coming, for giving up part of your time. I am with Forge. I didn't say that at the beginning. We are a co-working space, and so it has always been part of our mission to provide content, information, education, really to help your business grow. So now it looks a little different when we're all trying to figure out what the next steps are, what we can do to best protect our business, and then grow over the next 3 months, 4 months, what it looks like as everything starts unfolding. So one of the things that Adam mentioned was to have a good cash analysis and a plan for the next several months. So we actually are hosting another webinar tomorrow. The title of that webinar is Navigating Your Business Through the Next 3 Months. And it's with my business coach who I work with, and it's really looking at our cash flow projections, what we can do to protect, how we can plan out the next 3 to 5 months to really put yourself in a good position. So I would highly recommend y'all attend that as well. We can send out the link for that. It's also on our Instagram page, on our Facebook page, it's on Eventbrite, it's everywhere. But we really, I know that there's a lot of information. There's a lot of Zoom calls happening right now. There's a lot of webinars happening right now. But we just want to bring you timely information that's really going to help your business grow. So we are committed to continuing to do this. As the weeks go on, it won't be like back-to-back webinars, but we just felt like this is information that people really needed now. So please feel free to reach out to either me, I'm Kim at Work at Forge, Adam will provide contact information with a follow-up email. And if you have any other questions, please feel free to reach out and we will try to address those. But y'all have a great rest of your day, and thank you for joining us today.
Take care.
Bye.